And welcome everyone to this week's Business Bytes. Once again, we get the thumbs up from Andrea, our welcome business partner in BizMojo, Andrea Anderson. And we're joined today by Andrew Stewart. Andrew, if you could tell us a little bit about your business, please.
Oh, thanks, Peter. Good morning. Good morning, everybody. So I'm what's called a finance broker, and there's a little bit of a difference between differentiation between us and a mortgage broker. Finance broker, it does the mortgage broking, but is probably more focused on commercial, so on businesses and I suppose to some degree the self-employed, but also the more sophisticated and higher end PAYG clients. So we're just providing broking services to the community between them and the banks or the lenders. So locating money, basically securing the money.
All right, so you must be a popular bloke when at all times because you're the gateway to getting the financing. So for our listeners out there are small to medium-sized businesses. What are some of the things that they would be coming to you for financing for?
It could be things like they might be buying a new car or new manufacturing equipment. So that's equipment finance. They might be coming to see me to purchase the property that they're currently renting or their business premises. So that would be a commercial mortgage. They might be investigating other angles for working capital to put into their business. And so in that situation, we would take an overview of their entire financial situation and whether there's equity in property that we can use, which obviously has a lower cost associated compared to unsecured lending. So generally working capital. And it may be insurance premium funding, where instead of paying the annual fee in one hit, sometimes that can hurt cash flow a little bit. So we can spread that out over 10 or 12 months. So that improves cash flow a bit there. So anything cash flow oriented or acquisition of new assets.
Yeah. I just as you were saying that, I had one of my ski clients was a anaesthetist, and she worked for herself, and I think her insurance bill was close to $300,000 a year. So if she wanted to put that over 12 months, she could come to you and arrange financing kind of thing rather than pay it all up front. 100%.
And so on something like that, it's amazing how low the cost can be for different various financial products. Like the cost on that is probably lower or similar to, a home mortgage. So kind of 3%. So it's a very, very low cost and it enhances cash flow considerably.
Yeah. So I got a myriad of questions, so I'm just trying to pick the best one to start with. The first question I've got, which is probably the hardest question, so we'll throw it up front, is usually when you need the money is the hardest time to get the loan. So how do you go through the assessment process? How does that work? Like, obviously I'm a small business owner. I need some cash flow support, or I need to offset something or to expand the business. How do you know when you're in a half decent position to get some help financially?
So that is an interesting question, and essentially I think it comes back to a broker's key value add, and that is that we like to be, on the inside of the tent and like with the accountants, and so we tend to want to build relationships with clients. That's how we can, after regularly seeing their financials and understanding what their goals and ambitions are, we've got that thinking in our mind, so that we might say, oh, look, you're not ready to go this year to buy this or buy that, but if we do X, Y, and Z, then we can get there. So it's probably it's working a little bit with cash flows. It's working a little bit with their longer term needs and objectives. So, but look, if we haven't been working with the client and got them prepared like that, then unfortunately, I suppose that if people are in a bit of a jam and they're coming to see me, then oftentimes we can't get quite the lowest cost, the best option. And we might have to choose strategy B or C, which might cost a little bit more. And that's a bit unfortunate. So all I can say is that we just prefer that the business owners are well aware of what's coming up. They're well organised. They've got cash flow forecasts, and they can see these things on the horizon. We only need, a couple of months, often, foresight to get ready to do something. And that can mean all the difference that can make, 3 or 4%, interest rate difference on the options. So it's kind of like up to them to get prepared.
So really good advice there. So for the listeners out there, obviously know your numbers, speak to your accountant, be aware of your cash flow position now and into the future, and get on the phone sooner rather than later, and start sort of building the relationship with someone like Andrew. So it's more of a partnership, isn't it, in a sense, because you're the guy that can make things happen in the business from the cash side of things, and they're the guys, the business side of things. Just need to keep doing a good job at what they're doing and being aware of stuff.
100%. Look, it's all a team effort. It's all a team effort, and there's only so much that I can do with what I'm given. But generally, it works much better if we've got some idea of what's going on in their minds and what they want to do. Yep.
Yep. And so you work. I'm guessing you work pretty closely with accountants and maybe some business advisors and things like that. How is the process work for you, like with new business? Do people like refer to you, or how do you generate your business?
Yeah, that's right. So but essentially for me, it's referrals from accountants, or it's word of mouth, or existing clients, repeat clients. Yeah. See, sometimes the clients will, if they've got a large capital expenditure program, so they're a transport company, and we know that they're regularly buying, trucks or trailers, then what we will try and do is set up them an equipment finance line, where they might get a limit of, $2 or $3 or $4, $5 million, and we just have got essentially a pre-approval in place, and it's just you get the invoice from the client, and then an assigned privacy agreement, which is a compliance thing, easy. And then we just we roll those through, and it's like 2 signatures, and the finance is done. That's really simple. But I suppose I'm just reflecting on what's happening currently, and currently, business is a little bit quiet. It's a little bit quieter in some respects. Whilst mining is running really strongly, some of the other sectors, a lot of businesses, whether mining or not, have been the recipient of these government support programs, and that's really flooded the whole economy with a lot of cash. And so, I suppose at the moment, people aren't coming so much for working capital because they've got supplied with that. But things are beginning to roll over and change on that support program. So back to your earlier question about, what should clients be thinking about? Well, certainly if they have been affected by, COVID, for instance, at the moment, then they need to be quite mindful of the cliff that everyone talks about of coming up with the job seeker and job keeper program phasing out. And being mindful of where they can get the cash, because it is becoming much harder to get any approvals done in the current environment. The banks are terribly wary about new business, even existing businesses. They're going through with a fine-tooth comb. So honestly, yeah, the more time that we've got to work with them, the better.
Yeah, that makes a lot of sense. So if there are listeners out there on the call that things are okay at the moment, but yeah, there is a shift happening in March, isn't there, where you know, essentially a lot of the support programs are just literally being switched off. Just out of interest, like what's the best way to get in contact with you if someone is listening and going, well, you know what, I should speak to Andrew?
So just by either email or phone.
Yep.
You know, happy to have any kind of I'm usually not too far away from answering any calls. You know, I can get back quite quickly. It's all about customer service. And so just by the phone or email.
Yeah. And do you have a website that we'll put in the description as well where people can get hold of your contact details?
Sure.
What's the website?
It's pacificfinance.com.au.
All right. We'll make sure that's in the description as well.
Yeah.
I just wanted to throw that in and not have, if people don't necessarily have to wait till the end of this, because they might go, you know what?
Yeah.
That's exactly what I need. So we touched on it briefly at the start, but like, if there's always the perception of, oh, I can just do that myself. Whereas, you know, in speaking with so many experts that we've been doing through Business Bytes, we fast realised that we're better off going to someone who lives and breathes, you know, the space, because they can fast track everything for us and also help us navigate all the pitfalls and things like that. For someone out there who's thinking, oh, I'll just do it myself, what are the benefits of going through a broker?
So, okay, well, I used to run my own businesses, and I used to buy a lot of equipment, and I used to buy you know, a lot of property, and I was doing a lot of that myself, except for the equipment finance. I had a specialist doing that for me. A, because I didn't really know and understand the product, but B, I found that whenever I price checked them, actually the broker was getting a better deal, and I was kind of figuring, oh, how could this be? And now that I've been working and being a broker now for 6-7 years, I've understood why, and that is that, every day I'm calling, you know, all the panel of lenders basically, and for understanding their rate, because I've got, you know, say, you know, a dozen or a couple of dozen deals on at any one time. So I'm always in contact with the market and know exactly where rates are, for instance. So that's one. Second point is that brokerage firms are not all necessarily all created equal. Some are larger than smaller. Ours is probably a larger one. And therefore, we've got not only one broker making a relationship with the bank, but we've got, you know, there's a dozen of us. And so we form a bit of a cohort, and we build up our own relationships with the lenders. And so we can pick up the phone with them and we can talk through this deal because we know who we're talking with and they know where we're coming from because we've done business before. So there's a lot of existing relationships that really add value that's immediately passed on to the client. And our scale also gives us, you know, better rates, and they tend to want to look after us as well. So there's a lot of those reasons why we know more about the product and the service that's trying to be delivered. Now, why would a client want to use us as opposed to doing it themselves? A, it takes a lot of time. They would have to then talk to all those 4 or 5 banks and then make the presentation, make time to catch up with them, present the deal to them, you know, and all the while it's just chewing up their management time. But even then, you know, do they know that they've got the best deal? They don't, no. So it's time for them, cost. What else? Sometimes a product knowledge. There is a lot of different product out there than just simply what the main banks have. And I think every 2 weeks we've got a new lender coming in and presenting to us saying, this is our new product, this is what we're doing. And they're all slightly different. So we've got a clear picture of the landscape and what product is the right one for any one client. clients don't necessarily, they don't have to know all this stuff. They just have to know how to build a relationship with somebody to work on their side. And the fourth point, I suppose, is that, you know what, they're often not, clients aren't paying us. It's the lender that's paying us to do this work. So the client's kind of getting a free kick, really. You know, we're doing all the work, and the banks are paying us, but it's all in the client's best interest.
Yeah, which is a really good point. That was going to be my next question. How, like on most of the deals, you don't take a fee from the client, you get paid through the bank, and the bank's happy to pay you guys because you're fast tracking, because you're bringing the deal in the right way. So you're streamlining their business. So it's a win-win-win in a sense, isn't it?
Yeah. I had a client just the other day, and they were buying some pumps, and I could get that. So that was an equipment finance deal. I could get that turned around regularly in about 48 hours, which I had duly done with one bank. Now, they had an existing relationship with one of the major banks, and so I also had to work through their relationship manager to get the same deal approved, because that's the way that banks work. We respect that they've got the relationship in that situation, and so we work through them. That's all fine. It took 4 weeks to get that approval through the relationship manager. Then it took me to get it done at a new bank in 2 days.
Right, which is a really good point, because 4 weeks is kind of boring when you need the cash and you want to get going.
Yeah, 100%. That's terribly frustrating.
Yeah, because it's all about cash and cash flow and getting deals done and just moving on. And so, like, I guess, so that from the business owner's perspective, they can focus on what they need to be focusing on and let you do all the stuff in the background, and the money magically arrives.
So a client might spend, 4, 6 weeks or months strategizing up what they're going to do and how to spend the money, because some of these chunks of money are reasonably sizable investments. So after you've made that strategic decision, the business owner then wants, right, now I'm in execution phase. Let's wheel in, Andrew or my broker to get the deal done. They don't want to spend another 3 or 4 weeks or months waiting for that finance to be executed, because executing the deal is actually the really easy thing in theory. But making the decision is the hard thing. So once they move into execution, they want it done quickly, business owners. Yeah.
Yeah. And so I guess one of the skill sets in your business is just not what you know, but it's also who you know. So it's not just knowing the landscape, but it's also knowing who to pick up the phone with, and because they've done business with you in the past, you're just fast tracking the whole process.
Yep. So I suppose we're starting to fulfill a role, which is the private banker for small and medium business. It's, as my hair would attest to, I've been around for a little while, and I remember going to get my first loan from the bank, and I was, I think I was 20, and my dad came in with me, and we made this verbal presentation to the bank manager. I think we did a little bit of a back of the envelope cash flow on a sheet of paper, and he approved it, and off we walked out of there having the deal. But the days of that kind of relationship manager, where that relationship manager knew my dad and he knew me, and we built up, that's all gone. Any business, small business, turning over less than 5 million would not have a dedicated relationship manager. So they don't have anybody that knows their business, and that's pretty frustrating, as I would attest to from owning a small business. That not having that relationship is terribly frustrating. So, what our value proposition is, that clients are just outsourcing the relationship management of lenders to us.
Yep. So they're not going to be in a position to have a relationship, so they may as well form a relationship with you, and you've got multiple relationships in multiple sectors and in multiple banks, And so it's essentially just plugging into a existing web of money excellence, I guess, in a sense, and you go from there. I mean, it's a great business model in that you get paid on getting the deals, so it's a great, like, there's no real downside into using a broker as opposed to doing it yourself, really, is there?
No, but I suppose that I would just say, qualify that slightly by saying you do have to pick your broker. I think, we've got a situation where the mortgage brokers, with no disrespect, they're being encouraged to move into the commercial world by some of their industry bodies, to diversify their business income streams. But I take that with some reservation, because you've then got clients that have never really you've got brokers who might not necessarily have the insights and the qualification to be able to be working with sophisticated business structures and problems and product experience. So I tell you what, every product that I use, broker, I've used myself. So I mean, I've been in there seeing how it all gets coded in my journals, and had to work with all this stuff on an intimate basis. The danger is that a broker could put in the wrong product, or make the wrong recommendation, and it impacts the business. So I suppose one would have to be a little bit discerning before taking on a broker for your commercial business.
Yeah, that makes really great sense. So, buyer beware out there. Not all brokers are the same. Some are better qualified. Just have a good chat with your broker and make sure they understand not just the banking side of things, but also the business side of things, and there's a good mix there. So obviously you tick all that box, because it's kind of like, from a coaching perspective, there's coaching and then there are mentors, and mentors have already done it, and coaches are kind of bringing out the best in people, whereas you've already done it in previous businesses, and now you've moved across into helping others benefit from your expertise, having been in their been in their shoes in a sense. So I mean, a tip for anyone listening out there, that's the best kind of service provider you can find, is someone who's actually been up at night with the same kind of worries that they've currently got, has found ways to solve them, and then has come and decided, what, I'm actually going to step into this business model and help people in the way that I used to help myself. So, in terms of business, let's talk about some of the businesses that, you don't have to give away names or anything like that, but some of the businesses you work with, and some of the ways that you help them to finance different things, just so we can spark people's ideas as to maybe what's possible.
Okay. So I've mentioned the example before of the equipment funding revolving master limit. That's so I've got a number of clients using those. They're very handy, because that's there's a much more speedy and expeditious way of getting deals done quickly. But that's with equipment. Okay, with equipment funding, we've got a lot of what we call low doc, or tick box type of product, where clients have essentially, if they fulfill a certain number of criteria by property owners, the business has been going for more than 2 years, kind of the two main ones, we can get them pre-approved for up to $250,000 worth of equipment finance in it, at the click of a switch. But after those contracts have been running for 12 months, they uptick to $500,000. So that if somebody was, for instance, looking to grow their business, then, what we would do is probably, and say they were buying 3 trucks or 3 delivery vehicles, we wouldn't put them all to the same lender. I would probably put them to different lenders and set up that pre-qualification process so that after 12 months we could qualify for, that's
1.5,
750,000.
Yeah, sorry,
1.5 million. Yeah. So there's ways that we can strategize this pre-qualification. So that's an example. Some of those are a little bit more difficult to work with at the moment because COVID has got some policies running where it has induced a policy pretty much across the board where new to bank is much more difficult to get set. But nevertheless, we still work with that. What's a different product? Another product would be supply chain finance. So we're putting in place a product to pay creditors. Now, some creditors in this environment are going only cash on delivery. So that's crimping working capital for businesses. So we can get some of those, we can get those financed. Therefore, you can get the raw materials in or whatever it is, input to your business. You can get that paid for and start to create your own cash cycle, value adding, whatever you're doing. So supply chain finance is an interesting area. It's still ready to catch on, but nevertheless, it's got some amazing abilities to unlock reduction in cost. Because what you might do is, if your supplier had you on 30 days, so let's say effectively you're paying that at 55 days, that supplier, he might also want his cash up front, but his terms are as they are. So he might say, oh, look, Peter, I'll give you a 2% discount if you pay me within 10 days. A 2% reduction in cost is effectively 36% investment over per annum. So that's, and we can get supply chain product for half of that cost. So it can be an interesting little number crunching exercise and negotiation exercise for the office administrator or for the business owner to do, is to see what costs he can negotiate, reduction in costs he can negotiate across his supply chain. And then we can put a product in to pay for all that. And, there's a cost of the supply chain product, but the net effect is still that it's making money for the business. So, it's all these kind of little, there's a lot of these little 1 or 2% points in the game that add up for businesses. And sometimes, so this goes back to this, like a lot of business owners might not know that there's that product, or are looking for stimulation on what can be found in their business finance product. It's a little bit hard to talk to in this situation because everyone's so different. So That's why it's more of a sharing of the information and the strategy that we can devise different solutions. What else is there? I don't know. So the working capital end of things is usually fairly interesting, which, debtor finance, trade finance, reverse factoring, supply chain finance, unsecured loans. Or I probably, just on that unsecured loans point. So we've got all these new little lenders like Prosper and Mueller, and so all these guys work on little algorithms. They'll give you your cash, but it's credit card rates plus. So that's quite expensive, and cash flow wise, it might get you out of the initial jam, but leave you with a legacy which is crippling in your working cap, in your cash flow. So I suppose that the business owners should be should be thinking about alternative ways of finding finance than just reaching for that that sugar hit of the unsecured loan, because they're easy to get, and mortgage brokers are encouraged to sell them, and a lot of those companies are advertising on the radio, so they're kind of easy to access. That's the whole point, but hard to get out of and hard to extricate one's cash flow from. They really need to be thinking about other avenues within their business to try and devise a strategy for not using those.
I've got another one for you. You mentioned earlier on the call that like the business might be doing well and they've been paying rent, and they decide they might want to purchase the property. Can you just talk us through how that would work?
So essentially, in that situation, we would be looking to, that's usually a really compelling business strategy, whether it's through an SMSF, self-managed super fund, or whether it's through the business or a separate entity. It's fine. But it's quite compelling for business owners to do that, because the commercial rent is quite an expensive line on the profit and loss. So what we would do is we'd see how much they're paying in rent and essentially use that to offset or compare that against what the principal and interest payments would be on a loan. Some great little variations that have come out this year on commercial loans is that the principal repayment period used to be quite tight for commercial. We're talking 15 years. But now regularly we're getting 20 years and even 30 years on principal and interest repayments. So that's really lowered the annual cost of utilising that asset. So the rent might have been $5,000 a month. Well, now we've got probably a principal and interest repayment for $3,000 a month. And so the business knows that not only are they paying for their own premises, being ownership, they're creating an ownership for themselves, but it's also increased their cash flow because they've got released $2,000 from rent back into general business.
Yeah, that's a really good point. It's mind blowing in a sense on how many different ways you can approach this, and it's like how long's a piece of string in a sense, isn't it? Like,
yeah.
What in terms of your ideal kind of businesses to work with, what sort of is there a sort of an ideal, like a sweet spot that you guys work in, or?
I suppose, I'd start by saying that no deal is too small. I've done insurance premium fundings, for $5,000. And the point is, I suppose, about that is that it's about building the relationship. And that guy, he might be on this growth trajectory that I'm making an investment in their success. So no one's really too small. And I suppose that once they get, once the turnover is exceeding, 20 or 30 million, they probably at that point would have get a relationship manager of suitable qualification and experience from a bank to assist them. So I suppose that, my clients would have turnover anywhere between, 500,000 and 20 million. And they would have a range. So for me, it's just the self-employed anywhere in that sector. Like, I'm not, yep. I work across all the sectors. It doesn't matter whether it's ag or it's transport or any trading business, I'm quite comfortable and have experience working with. So I'm not, sector specific in what I look for. But I'm just looking for a client that respects the part that we play in the process, and that that they're open and that they work with me. So the ideal client is one is looking for assistance. Yeah.
And Australia-wide, like, you got clients all over Australia, I'd imagine?
Yeah, we do. And technology's, caught up with things a bit, so we can sign a lot of documents, electronically now. And we've got FaceTime, and we've got a bunch of different techniques that we can use to ensure that that we can look after anybody anywhere. To that point, all the banks have centralised all their credit anyway to Melbourne or to Sydney. So it kind of doesn't matter where the deal comes from. We're able to look after them and get them attended to fully. I mean, the local branches don't fulfil anything anymore other than house the ATMs. So they've really been dumbed down such that, look, it's all done by phone, Skyping, or remotely.
I mean, it's an interesting business model, isn't it? It's about you going out there and finding out, understanding the market, understanding what, where the best deals are at the moment, and then people and business owners come to you and go, this is what I'm looking to achieve. This is where we think we've got a problem. This is what our accountants highlighted. And then you just go and start working through and finding them solutions that are literally going to help their cash flow and also reduce their costs in a sense, and also can free up capital can free up other cash in other areas of the business. It's a wonderful world that we live in, where we've got access to doing these things on some sense. In the time that we've got remaining, Andrew, are there any pitfalls or things that we need to watch out for when we're navigating the broker market? You have mentioned some before, but just, yeah.
Well, so I suppose I think you probably want to, if someone was looking for a broker, I would be suggesting that they talk to 2 or 3 or 4 of them and get a feel for them, because quickly in 5 minutes, in a 5-minute conversation with them, you would understand if they understood your business and it resonate. There was a resonation there that they clearly got it, and that it was someone that you could relate to. Because it's about people, it's not about money. It's about people, this whole game. And so being able to communicate and have somebody listen to you and understand is really what it's about. So it's just a simple interview process, I would say. Talk to 3 or 4 of them. I would certainly, in this end of the market, I would probably be counselling them to be wary of those that have come from a banking background, because those guys, with all due respect, and they've clearly known their business, their brands well, and their brand's product, but that doesn't give them, I don't think, in my opinion, the keen understanding of what challenges on an intimate basis, what the business owners are going through. And they've never really used the product, and I think that's a key difference. And I'm not saying that all of them are like that. I'm just suggesting that that there's a little bit of extra added value, I think, that comes from one that's come from a commercial background rather than a banking background. There's just less tools seems to be. Their learning has come from a narrower range of tools in the toolbox. And I probably just to that point, the banks have become industrialised over time. And industrialisation means it's all about like lowering cost. It's about standardisation. It's about having processes and strict processes. It's having people that work within those processes. And those people that are working within the processes, it's reducing the cost of labour. So reducing qualifications, reducing experience. That's got to be the business model of a bank. And so it's very expensive for banks to look after the small and medium business clients. They don't have the product range, and nor do they have the resources to put into their people to train them to deal with understanding the market. So hence, we're seeing that everybody's complaining. We complain about the banks retracting from lending to small and medium business. And for all those reasons I've just mentioned is reason why. It's just not something, they're never going to come back into this space. They're retreating, and they're just working on clients' loyalty, misplaced loyalty, the loyalty tax, to keep trading with them, all the while to knowing that they don't have the product. For instance, ANZ and CBA, they don't have an invoice finance product. But an invoice finance product is a key part of the toolbox that you need for servicing small and medium business from time to time. But those guys don't have it. So the big four banks, they don't have what it takes to really service this clientele. Home mortgages, it's easy stuff. And the bigger end of town, well, there's money in it for them. But this wedge of the market, no. So that's probably a little bit of a rant about the banks, but, it can be very frustrating, very frustrating.
No, it's definitely good information there. We'll get Andrew back on the call shortly too. Andrew, just so if you were to advise small business and they were to go out there and they've got like 3 or 4 brokers that they're going to talk to, what are some of the questions they should be asking of the broker?
So has the broker got experience writing equipment finance? Have they got experience in the mortgage market? Are they accredited to write home mortgages? Now, they need to have that because we've got cheaper product in home mortgages than we do in business sometimes. So you need to be able to flip across there and use that. Have they got experience with working capital products, not just the unsecured loans? Have they got experience with debtor finance, trade finance, and reverse factoring? And do they know where to go for insurance premium funding? Now, if you can't get clear answers, quick answers to those, then you haven't got a broker that is across all of their needs. So if the broker's not across all of their needs, A, they're not going to be able to service them properly, but B, it'll just create more time because then I'll have to have 1 or 2 brokers to fill in the gaps of the first one.
Yeah, that's some excellent advice there, Andrea. It's been a wonderful call today. And firstly, thank you, Andrew, for sharing your expertise. It's been brilliant, and it's one of the things that we sort of know about, but we don't really know about until we get to be able to speak in depth with someone with your level of industry experience and expertise. Andrea, your thoughts on today's call?
Look, it's an area that's always been grey for me. And I think it's grey for most business owners, unless of course they're going through a growth strategy inside their business. And so look, definitely, Andrew, I think you've potentially taken out some of the greyness for a lot of people and also help them to, I guess, simplify the process when talking with someone like yourself. I'm just curious though, Andrew. I mean, look, we've gone through this crazy, ridiculous thing called COVID-19. And, look, we are still in the midst of it. It hasn't gone away, and the ramifications economically on businesses is going to be felt for quite a long time. So what would be your recommendations or suggestions or advice for businesses in regards to, I guess, what they do need to be doing today to prepare them for tomorrow, for next week, from your perspective? Have you got any thoughts or ideas?
I definitely think that they should be doing a couple of things in the background. They need to be reviewing their strategy and their market value proposition. They need to, and if that does not need, or that may need some tweaking and some changing, you know, with the trend to be moving online, and you know, and so on, probably a bit more of a networked business rather than you know, the standalone,
the traditional,
yeah,
bricks and mortar.
So and sometimes it's really valuable to get a business consultant in to help them
understand that,
kick the tires on the business model. And once they've done that, you know, there might be some changes to make to the businesses and to some of the inputs or the outputs, right? So, and from that, build up the three-way forecast. The three-way forecast is cash flow, the profit and loss, and the balance sheet. And that's quite a complex task, and that often best outsourced. But obviously, we have having the financial controller work, you know, with them, whoever's building it, to get it accurate with all the inputs and so on. So that's a team effort. But coming up with a robust forecast will allow the client, the business owner, to understand what gaps they've got. Now, they might have a cash flow, there might be a deficit there, or there might be just a deficit for a few months. And then, but with that visibility, they can start putting in place, you know, some the right product, right finance product to help them through that time. So, I think it's about being sure of one's business model and reasonably sure about what's coming up in the future. I mean, so many guys don't run with budgets at all, and it's a bit in these times. It's a bit problematic. It's highly problematic, actually. You know, you can kind of get by without it, but it's such a great tool.
I think it's interesting, just coming back to what you said though about really understanding your business model, and I do believe that this is where businesses do get it horribly, horribly wrong. We talk about strategy, we talk about tactics, we talk about processes, we talk about systems, but fundamentally we don't actually look at taking a big ginormous step back and actually critically analyzing what is your business model for growth or for expansion, or what is the business model moving forward. I wonder, obviously COVID impacted a number of different industries, both positively and negatively. If you're in the marketing industry, for example, like myself, we've gone gangbusters because we've had so many businesses realize that they're not as digitally savvy as they could be. So we've gone busy, but we know that there are other industries that have gone bust or close to. So just picking up what you're saying there about the business model, how important is it for these businesses moving forward into 2021 and beyond to really be critically analysing and reviewing their business model moving forward?
Oh, 100%. That you know, there's nothing more important, because from that decision, that drives the rest of your decisions. So the decision that I'm talking about is the one which says, well, you know, there's this quadrant, isn't there? It's like you're either growing or you're harvesting, kind of thing. And if you're growing, well, that requires a different approach to the business. But if you're, you know, say the business owner is 55 or he's 60, you know, and he's thinking, well, actually, I don't quite have the energy for all of that, and I don't have any kids to leave the business to. So I'm just quite happy ticking along as I am and not making any big changes and not really assessing the business model. That's also cool. I mean, that's just fine. That's perfectly cool. But in that situation, they should still be analysing other ways of reducing cost. They don't necessarily have to analyse the business model, but they should be still looking at cost and still, because otherwise they're still vulnerable. They're vulnerable to the other guys that aren't, you know, sitting still.
Yeah.
And as I say, it's okay to live with that vulnerability, but one must be, I think, aware of where you are in the quadrant.
I guess it's managing risks, really, isn't it? Managing your both internal and external business risks. So the internal risk being, well, you know what, look, I'm okay, I don't need a budget. my business isn't, it's just me tickety boo. So there's still an internal risk element there that we need to consider. And then obviously your external risks being, well, actually, what are my competitors doing? And more importantly, what's happening externally that I don't have any control over either.
Yeah. So, having working with somebody who's specialised in that will be helpful.
Sure.
Just to be helpful. Once again, I think one has to be reasonably careful about who they get in to do that, because
Absolutely.
I see it happen a lot where that somebody or other has advised them to build their business in a certain way, and get bigger is better, but it's not necessarily always the case.
No.
So it doesn't need to be blanket advice that one needs to grow and try to
Correct.
Outcompete everybody else. It's also about being self-aware enough to aware of their business enough to be happy in that space, in their skin.
Yeah,
perfect.
That's a really good point. And just on that, I've been watching some of the most popular Kickstarter programs for businesses, and there are companies now in the US that use this as a source of funding to, so they'll do all the product development, they'll put it out to the market, and they take all these pre-orders. But then there was one of the companies was talking about how out of the top 10 Kickstarter campaigns, 50% of those businesses are no longer around because they didn't manage the fulfillment side of it, which was maybe scaling up the business to meet all this extra demand. And we're talking, this campaign raised, I think, $12 million or something. And you think, well, $12 million, how could they go wrong? Well, they were going through what they needed to scale up, and they needed to spend like $2 million on equipment. They'd already organized finance for that. And so it's not just, getting the numbers right is key. So Andrew, if anyone is out there and they're looking to ensure their sort of cash flow and their position and to get some advice in the broking space, Andrew is your guy. So thank you so much for sharing your expertise today. I'm sure that the listeners got a lot out of it, and it's certainly it's made things a lot clearer for myself and Andrea, and thank you so much.
Oh, thank you guys for the opportunity to talk and to talk to everybody and let them know what we do. We do an important role, and I appreciate the opportunity to tell everybody.
Yeah, that's fantastic. All right, well, thank you. Thanks once again to Andrew for sharing his expertise. We'll see you all again next week. But for this week, it's over and out, and thanks once again.